Hey, good morning, everyone. My name is Frank Chistalti, and I'm your VP of Innovation and have the pleasure of leading Medical Alley Starts. Thank you for joining us on our first Ask Me Anything of 2024. I'm sorry, our second Ask Me Anything of 2024. What a fast year, where we're going to have a very interesting conversation. Hopefully, we'll all learn something new today. You'll get a chance, audience, to ask some questions. Before we get started, though, I just want you to know if you're an entrepreneur out there and you're working to raise capital, find partners, find talent, you're trying to find resources, or even just find community, remember that Medical Alley Starts is here for you. We are an initiative that was created by your peers, by other entrepreneurs in this ecosystem and around the world to try to make your job a little bit easier. Never easy. We know it's never easy, but make it a little bit easier. So if you haven't, reach out to me, reach out to Philip, say hi, let us know what you're doing, and put us to work on your behalf. It is our pleasure. The AMA series is a webinar series we've been doing for a couple of years now to give an opportunity to introduce people to the broader ecosystem, get some insights on what's going on in the market, but most importantly, give you a chance to ask some questions. So once we get started with the Q&A, I'll have a set of starter questions because I know we've got a number of Minnesotans in the audience and you don't want to sit in front. You don't want to ask the first question. I will handle that for you. But throughout, use the Q&A function. I'll have that up on my screen. If you see me looking this way, that's because I'm looking over at your questions. Throw questions in. I'll incorporate them into the conversation as we go. If you asked a dumb question, I will filter that out. It doesn't happen too often, but be respectful, be thoughtful. Do not ask, will you invest in my company? This is not the forum for it, folks. But do ask about what's going on in the market, what makes a good company. Ask for perspective. Second thing I want to do before we get started is I want to say a thanks. We have a great set of sponsors who help make Medical Alley Starts possible and make this webinar possible. We've got a short video we're going to play right now that'll introduce you to those organizations. And I would ask you, if you need help, if you need services, support the companies that support your ecosystem and engage with these organizations. Tyler, if you want to throw that video up, go ahead. Thank you.
Hi, my name is Paul Carlson, and I'm a principal at CLA. CLA is a professional services firm that provides industry-focused outsourcing, audit, tax, wealth advisory, consulting, and digital services to healthcare and life science companies, including startups. We pride ourselves in working closely with entrepreneurs and business owners to help preserve capital, manage and mitigate financial risk, and achieve the future they envision. If you'd like to learn more about CLA, you can visit claconnect.com or contact me after the event. Medical Alley would also be glad to connect you, or you can find me on LinkedIn. Thank you.
Perfect. Hi, my name is Morgan Evans, and I am the founder of Avio MedTech Consulting. We provide fractional services in the areas of quality, regulatory, and engineering to medtech startups. If you would like to learn more about Avio, we ask that you visit our website at www.aviomedtech.com or contact me after the event. Medical Alley would also be happy to put you in touch with us, or you can reach out on LinkedIn. Thank you.
Hi, my name is Ryan Johnson, and I'm a corporate healthcare attorney and shareholder at Frederickson and Byron. Frederickson is a full-service law firm based in Minneapolis with offices across the Midwest and in China and Mexico. We serve as legal counselors, business advisors, and strategic partners for many innovative life science and healthcare companies, ranging in size from the smallest startups, sometimes just a founder with an idea, to some of the world's largest medtech and healthcare organizations. If you'd like to find out more about Frederickson, you can visit fredlaw.com or contact me after the webinar.
Hello, my name is David Pomfret. I'm the Vice President of Clinical Operations for Mobius Medical, an Australian-based contract research organization with U.S. operations based here in Minneapolis. Mobius is not your typical CRO. In addition to providing world-class clinical trials in the medical device space, we are also your strategic partner, coming alongside you during your product development journey. Mobius can provide access to a full suite of subject matter experts, including product development, regulatory and reimbursement, and go-to-market strategy. We were able to focus on medical device startup and scale-up companies and provide a flexible and tailored approach with those companies based on their current product development stage. If you are interested in finding more about Mobius's unique CRO capabilities, please contact me via LinkedIn. Otherwise, our mutual friends at Medical Alley can connect us. Thank you.
And thanks to all our sponsors. They help make this possible, and they've been great partners in supporting the ecosystem. And with that, we're going to get started with the program. Folks, I'll remind you, as you have questions, anytime throughout, just type them into the Q&A. I'll be watching it on my other screen. And I'm just realizing an interesting thing. Kate, you are the second former Bind employee to be on the AMA this year. We did not plan it that way, but it worked out that way. So Kate, thank you so much for joining us today.
Thank you. And thank you for Medical Alley. Both Tyler and Frank been great. And please reach out to them. I really encourage it. I also reach out to them. It's incredibly helpful to have someone connecting you in the ecosystem. And then thank you for the sponsors. This is, they allow this to happen.
Right on. Well, maybe we could start with the softball of all softballs, but the most, I think, important question. Could you tell us a bit about you and your background, and then tell us a bit about what Ascension Ventures has been up to?
Yeah, so I'll take a few minutes to do this because I have kind of an odd background.
It's really cool. I like it.
Yeah, so I will explain the rhyme or reason, because if you read it, it doesn't make any sense. And so I'll walk you through it. So, it kind of starts out with, I have been tremendously blessed with amazing mentors, amazing opportunities in my career. My background, I could have never imagined what I've gotten to do in my career from where I grew up. So I am from South Dakota. I'm not a native Minnesotan, even though this is my adopted home. So grew up in South Dakota, grew up in a medical family. So my father was a doctor. 5 of my aunts and uncles are doctors. And so very medical focused. I went to University of Minnesota. So that's how I came to Minneapolis originally. And I originally thought I was going to be pre-med. It's a really classic story. I love medicine. I'm going to do pre-med. And then I got halfway through it and realized I didn't actually want to do patient care, which is kind of a problem if you're going to do pre-med.
That's a good thing to figure out then.
I figured it out decently early, so that was good. But I still loved healthcare, and I loved public health, and I love the mission orientation of it. I love the science of it. And so I was trying to figure out kind of how do I do what I'm interested in, I love, but on a larger scale. And so that's when I started going down the business path. I frankly graduated though in the middle of a recession. And so I took my internship. That's the honest answer. And so I started out in strategy consulting. So I worked for Thomson Reuters in town, in their strategy group. A great experience. But it wasn't in healthcare. And that was ultimately the driving factor. And like most people, when you talk about their career, their personal life just naturally comes into why they make the decisions they do. When I was there, my mother died very suddenly of pancreatic cancer. So under a week. And it was one of those what am I doing with my life? If I'm not trying to make this better, and help people when they're most vulnerable, which is why I'm in healthcare. It's that you interact with the healthcare system at your lowest points. Sometimes your best points, maybe you're having a baby and that's the best point, but a lot of times in your lowest points. And so that system needs to be so much better. And society as a whole deserves so much better than that. And so that's when I went back into healthcare. So I looked around for a job and ended up in investment banking. Again, this sounds very kooky. So started out as strategy consulting, then went into investment banking, and I did equity research for med device companies. And that was a great experience. I really understood how the market evaluated things. How do you actually qualify R&D and IP correctly? And then from there, I transitioned and I actually went to one of the companies that we were following. And the transparent answers quickly knew it was a bad fit. I'm a pretty open book. I liked med device, but it was just not the right combination of, I was not a product person. And I kind of quickly realized that. And so serendipitously, I got connected with Lemhi Ventures. And so Lemhi Ventures is another venture capital firm in town. And we met over lunch, and it was just kind of serendipitous. Like we got each other, and I loved what they were doing. And so they were investing to try to find the next kind of healthcare IT, healthcare services company. I didn't even know venture capital existed when I was growing up. And so it was one of those like happenstance of I knew the right person who knew the right person, that we got connected, and they happened to need an analyst at the time. And so they took me on, and really amazing mentorship by multiple people there, and took me under their wing and showed me how venture capital worked. And how do you actually systematically do entrepreneurship in this area? And so that was a tremendous good fortune. And so realized I loved it, but realized I probably need more experience to be really good at figuring out how to help companies and how to kind of properly evaluate them. So then went off. I got my MBA from Harvard. Again, this is not my background. It was kind of one of those like, this is amazing. Tremendously blessed. And so went there, got my MBA, and actually started a company out of there. And so I spent about a year and a half with a co-founder who was fabulous. And I'm happy to get into that, but I'm going to go like high level, and feel free to ask me questions on any of these areas. There's just a lot of roles, and so I'm going to clip through them. So started a company out of there. So Jody, the managing director of Lemhi at the time, called me and said they were starting a new form of health insurance. So started talking with them, and that was Bind. And as soon as they explained to me the idea, I just fell in love. It was one of those like, this makes complete sense, and this is what the industry needs. And it was the right timing to do something in it. And so I moved back from Boston, back to Minneapolis, and joined Bind when it was no customers and no revenue. So just, an idea. And helped start growing that. And so I spent 4 years there growing that nationwide. I worked heavily in the revenue area, and then a little bit of product in the end. And so then we got bought by UnitedHealthGroup, stayed there a little bit in the transition, but knew I wanted to go back into venture. And so started talking with Ascension Ventures. Ascension Ventures was actually one of the investors in Bind. And so you can see the through path of like, I've had very good mentors, and I've met people along the way, and I kind of continue to go to the next company from the next company. And so really loved how differentiated the Ascension Ventures experience from a portfolio company was. And I'll explain kind of why that is. So really loved how they interacted with us for product development. Introducing us to people. It was just a different form of capital that I really appreciated.
Do you think that was related to their roots in health systems versus a purely financial organization?
Very much so. So kind of how Ascension Ventures is structured. A lot of people, especially in Minneapolis, haven't heard of us. So Ascension Ventures has been around for 22 years. It was the first kind of health system, one of the first that kind of all started at the same time. One of the first health systems to say, we need to actually invest on behalf of venture capital because we're not finding the right type of innovations for us as a health system. So that first fund started 22 years ago. Fast forward, we're on Fund 5. And that same concept has been extended and are our only limited partners. So we invest only on the behalf of 13 nonprofit health systems. So they have a very like set focus on how they view the healthcare ecosystem. And that also kind of what leads us to being a strategic fund. And so we invest on behalf of those 13 health systems. And we want it to be differentiated from both sides. So from a portfolio company side, we want to make sure that they're getting access to these health systems for either product development, how to think about working with them, could be commercial interactions. And then from our health system viewpoint, they're in this one, they want financial returns. Like we are a venture capital firm. That is a key portion of it. But two, they are in this because they recognize healthcare has to look dramatically different than it does now. I think all of us can admit that healthcare is not working correctly, and by a large measure. And so they want to see an ecosystem and an environment that looks very different, and their business model themselves might have to look dramatically different in 10 years. And I'm happy to get into kind of what's happening in the ecosystem of health systems right now. So that is the lens on how we invest. In terms of the stats, because I want to make sure if people are interested or they have a company that kind of fits us, please reach out to me. So we've invested, so 22 years, we're on our 5th fund. We've invested in 86 companies. 29 of those are still active. So about 2/3 of our funds, our portfolio companies have already exited. And we invest in healthcare services, healthcare IT, and then medical devices. And then in terms of check size, we write about an 8 to 12 million per round. And then we invest anywhere from like Series A to partnering with PE firms for growth stage buyout. We're actually stage agnostic. And that's because we want to make sure that the cap table looks correct for that portfolio company, A, but then also like innovation is happening in the ecosystem in kind of a range of areas. And so we want to make sure to be able to kind of help in those areas when it makes sense.
You know, and you made an interesting comment about the health system, or that Ascension realizing the future may need to look very different. The health system may need to look very different. And that at the start of Ascension Ventures, they weren't seeing the kinds of products or ideas or companies that they wanted to see to make those changes. Could you talk a little bit about like what is Ascension Ventures' view on the world of what it should look like and maybe what's been missing?
Yeah, so like, what do I wish I saw more of? So one of the lenses, so obviously the lens I have right now, I just came from a payer, and so I had that lens before. Now I'm investing on behalf of a health system. One of the things we've really struggled with, and honestly just struggled on finding, is business models that work for both a fee for service and a value-based care world. And so I'll kind of expand a little bit on that. So health systems right now are being asked to be the safety nets for their communities. They're the, where you get an appendectomy at 2 a.m. in the morning, maintain that kind of the infrastructure. It's incredibly expensive to do that. Continue to grow on very small margins or negative margins in a lot of cases. And historically, they've done a fee for service world. And so their IT systems, their executives, like all of their experiences in how to do fee for service world. At the same time, the government, payers, other people are asking them to say, hey, do value-based care. Intellectually, everyone agrees with that. But the problem is, like, if we're going to, we'll use a Minnesota analogy. Like, if you have a foot in each canoe, that's incredibly hard to balance if anyone's ever done that. So you're continuing to do fee for service world, and that's where the vast majority of revenue comes from. But at the same time, start doing value-based care, create a different technology infrastructure, have different experiences, do population health, figure out risk scoring, figure out how do you actually manage risk within your organization, and at the same time have downside on very little margin. It's a really hard kind of acrobatic act. And so what we're finding is value-based care, especially in the past 10 years, has really been, let's take $100 and we want to reduce it down to 95. No one disagrees with that. But that $5 right now is all coming out of the health system. It's reduce the hospitalization. Don't disagree with it. Like, it makes a ton of sense if you're a payer. Like, that is the approach. If you can reduce the hospitalization, you basically paid your value-based care approach. But the problem is that doesn't reward a health system for any of their work they're doing to keep a community healthy. And so the business models and actually who's getting paid for what is just really off right now. And so what we've been trying to really look for, and we actually oftentimes talk to companies and try to like figure out how to co-develop, is how do you create a model where waste is still getting out of the system? Everyone agrees with that. People are getting the right care at the right time, but all the members of the ecosystem are getting paid accordingly. And I think that's one of the areas that's really missing. And I'm happy to go into others, but I'm going to pause in case you have other questions, Frank.
No, that is real. That's a really fine line to walk.
Yeah.
It makes a lot of sense, though, that if you're in the one canoe today, you can't just overnight switch canoes, to use the analogy. And audience members, don't stand in two canoes, or you might end up in one of the hospitals. Um, so are there, whether it's companies or just more general examples, are there any examples of where you're seeing that happen that might help us understand, like, what can that look like?
So I can talk about, so we're not seeing it. So this is like, you asked me, like, what do I want to see? Like, this is actually what I want to see. We're not seeing it right now. I think there's some early ones that are trying to figure out basically how can you take, let's just say, full risk. So you're taking the risk from a payer for a certain population. And then how do you create the financial incentive so the health system is getting a certain portion of that upside in order to actively manage that patient population? Because like the little bit of like the unnatural act, and maybe I can say this because I came from a payer, payers are not well liked. It's not like people are, patients are like, I feel really a lot of sense of loyalty to my payer. No, they feel a lot of sense of loyalty to their doctor and their health system, or who is actually doing their point of care. And so those are the people who actually could have a better interaction with that patient and actually influence a better outcome, not the payers. But right now, the payers are the ones that are intervening and trying to get better alignment and care coordination because they're financially incentivized to do it. And so it's kind of like this Frankenstein of a business model that's not necessarily the best for the patient. It's maybe not even the best for the payers. But that is what's happened because they were the ones that could figure out the business model and actually get paid for it, where health systems were, I would say, hesitant to do value-based care at first because fee-for-service was still paying their bills, and it still continues to pay their bills. But I think most people recognize there needs to be a transition, but how that transition works and those baby steps are pretty important because you still have to maintain your margins and keep your hospital open.
Interesting. And I won't say names, but I resonate with that. With my insurance company has these health programs. They reach out to me, and frankly, I don't pick up the calls because I'm not interested in talking to my insurance company. I love the people, not interested in the company.
Yep.
My hospital system, my docs, they reach out, I respond, I pay attention to it. They've got intervention like, yeah, I know my docs. Insurance company is unfortunately kind of it's an entity, not a person.
Yeah.
And that's very interesting.
Yeah, so I think I think it's a disservice for the end patient at this point that the business model hasn't been figured out. And honestly, the business model right now is pretty adversarial. And so that doesn't help anyone. Like, payers are needed in the ecosystem. So are health systems, so are doctors. So like everyone serves an important role, but right now there's just so much tension and fighting that it's just the person who's losing is the patient.
Right on. I mean, right on. I mean, some folks who are on this call may know this, but like our fundamental strategy as an organization, and where Lemhi and Bind got involved with Medical Alley, was that premise of we need to reestablish better relationships between or among the payers, the providers, and the technology firms.
Yeah.
Because it's all of our fault that there are problems in healthcare.
Yep.
And we're the only ones, the totality, that are positioned to do something about it. So yeah, well said. I'm curious, I have a question coming in from the audience, but just before that, I wanted to ask, you mentioned having been an equity analyst for a while,
Yep.
and now you're at the VC side. I'm just wondering, do you look at companies differently when you were an equity analyst versus now? Because I think about, we have a number of companies as they get larger, they think about the public markets, or they think about acquisition, which influences their strategics in the public markets. Do you look at companies differently being an equity analyst versus being a VC?
Very differently. It's almost black and white. Like there's core themes within it, but in the public market, so much of it is incredibly short term. And so it's really hard to do these transformational investments and explain to the market why you're doing something, because like you need to do earnings per share next quarter. Like that's just like the reality of how that functions. And so you have to you really have to qualify like why you're purchasing things, why you're investing in any R&D. And so I do think there's a point where it stifles innovation. And so that is my bias. And so that is why I went into the private markets. I think venture is it's a venture or other means. I'm not like only venture. But I think that is an approach that you can make these multi-year bets and you don't have to answer to the market. And so like you can do these like, like case in point, Bind would have not functioned well in the public markets. Like, let's do an entirely new form of insurance that people don't really understand. And there's a lot of concern about it. And trust us, it's going to work. Like that conversation does not happen in public markets. Maybe in biotech it does, but like not in healthcare services, not in healthcare IT. And so you really have to have a lot of years of proof to prove that like, this is an amazing product, this works, here's the evidence behind it. And that's just like, it's just too big of a gap in order to go there.
Interesting. And yeah, you're right about that on biotech. Biotech, the public markets have accepted high risk binomial outcomes that have a long period of time. You don't get that in health IT or med tech.
No.
Yeah. Interesting.
No, and it's actually one of those things like, for my 2 cents, like my bias is that I actually don't think healthcare IT and services an IPO is incredibly likely. Like, so like when I'm analyzing a company, I basically never assume it's going to IPO. Like that is not the exit I'm ever assuming. I'm assuming that it's going to get bought by a strategic. And so a lot of our time is actually, and I say this because I would have found it helpful as an entrepreneur when I was an entrepreneur to hear this, is that figure out who your exits are and who they could be and really understand those strategics, why they buy, if they buy, how they buy, do they invest before they buy? Like there's all these factors that like, there's been a lot of good ideas. It doesn't mean there's good exits. And like, that's like really heartbreaking part about this industry. Sometimes it's like, you can have an amazing idea, amazing people behind it, and it doesn't lead to a good outcome because it's not the right environment in order for that to happen. And so like, one example is like, I would find it incredibly risky to build a product that depended on EMR, EHR companies to buy you. And the reason I say that is like Epic is notorious for they will not acquire.
They'll just do it themselves.
Yes, they'll steal your idea and do it yourself. And so it's one of those like, that's a great business model for them, but it doesn't work well for an exit for an entrepreneur. And so you need to figure out like, who are those natural exit points? How do they buy? Start to get to know them, really understand how they're thinking, where they're going. And so that's what we actually spend a lot of our time doing, is understanding that and those dynamics. The other approach too is like there is the approach that you sell to the next level and you sell to PE, and then they maybe sell to the next PE. It looks very different than an IPO, and sometimes it feels like a little not as clear, but it is also a very valid exit strategy and exit approach. And it's honestly much more common in healthcare services and IT than many of the other areas. So it's something to note and to notice that like an IPO is just, it's very difficult to do. And oftentimes it's not the right outcome.
Yeah, I think I really appreciate you talking about it that way, because historically in the device world, IPO is an option. It's been less so recently. So it's been more about the strategics. The PE side is something that, as I talked with health IT entrepreneurs, probably doesn't come up as much as it should. But that, I don't know if that's a recent phenomenon or not, but that does seem like they are much more active in this space than, the public markets or even the strategics to some degree.
Yeah, there's some very, very active strategics. And then I would say the other kind of like factor to layer in there, and so it's like you asked the question of like the analysis and how it's different, is really have a firm viewpoint on what are the exit caps that are in your given area. Because the number of companies, so like what we're still seeing in the market is the valuations don't make any sense.
Yeah.
In a huge portion of the market. The number of companies that say I'm going to exit for over $1 billion, at like, it's so many, and I am rooting for them and I would love to see it, But the reality is there have not been that many services and IT companies that have exited for over $1 billion. And so the sheer number of them that are getting funded right now to say like let's just say
Right.
you need a 3x to make your numbers. The number of them getting to $1 billion is just, it's not going to be there. And so really understanding like what is the check size of the companies that could potentially buy you is really important, so you don't overextend yourself in a fundraising process or over fundraise and not look at more creative options. And you preserve that ability to exit at a really good number and an exit in a way that you want to control, because like I've been there, like I've been an entrepreneur. You did this company because you feel incredibly passionate about it, and to lose it in the end because of exit dynamics and because of other factors, like that's heartbreaking. And so like
Indeed.
you want to make sure that you can continue to be in the driver's seat and you understand how that dynamic works. And if you don't understand it right now, ask questions. Like most VCs are incredibly happy to answer questions. And if they're not, maybe they're not the right people to partner with.
Right.
Like,
They're telling you something that's important.
yeah. So ask questions. Like ask questions. What are they seeing in exits? Like if you don't know a given area, like that's okay. Like most VCs are in it because they're really nerdy and they want to intellectually engage. And so like most of them are really happy to have those conversations. And it's actually pretty rare for people to ask us questions.
And and I will say, folks, top tip. I can't remember who told me this, but they said if you're trying to raise money, ask for advice. And if you're looking for advice, try to raise money. And this is like also true in sales. One of the best ways is, I know folks are going to be asking this, how do you get in front of the investors? Often is not to go head on and say we're raising money unless it's really well set up, but to build that relationship by seeking perspective, seeking advice. And I also make a recommendation to everyone. This was a book that a couple of VCs have recommended to me, but Venture Deals by Brad Feld is a really great guide to how venture capital as a business works. And it's eye-opening for understanding some of the responses you may get from VCs where it's like, oh, now that makes sense. Couple of questions coming in from the audience I want to pull in that actually line up really well. One, just a very practical question. One person was asking, for Ascension, what's like the timeline you generally are looking at as far as when, for a portfolio company, you want to see an exit?
There's no hard or fast rules. I think the dynamic to understand, so the reason I say like more nuanced answer to this is that one of the dynamics to understand about venture firms is the exit timeline depends a little bit on the age of the fund. And most people like don't ask this question of like what vintage was your fund is the way to phrase it. So what year did your fund start? And like how long do your funds normally last? Because there's some venture firms that they raise every 2 years, which means they need to deploy all the capital within that 2-year time period. And so their exits, have to be within, probably, in healthcare, 6 years. Healthcare is not a tremendously fast exits. And so like it's not consumer products. It's not going to happen to 2 years. But some funds are like, 5 years. And so if they're investing in year one, they might be much more patient and willing to go even earlier than they normally would because they have the 5 years of the other 4 years of the fund plus another few years after that. Versus if they're investing in year 5 of the fund, they're probably not going to go super early, even if they would have gone earlier years before. And so understanding those dynamics are really important because it does play into how they'll invest and where, like what type of companies they'll invest in based on the life of the individual fund.
Oh, that is a really good dynamic to understand. Yeah. Another question that came in, you mentioned not consumer. So what's your take on companies going consumer versus traditional healthcare routes? Is consumer of interest? Do you think there's potential there, or is that not the right tree?
So I will answer as Ascension Ventures, and then I'll answer for myself. So Ascension Ventures, we don't invest in consumer. It's one of those like there might be an odd investment where we end up playing in that space a little bit, but it is not our bread and butter, and that's not necessarily going to be how our LP base can be helpful. And so we also view it as like we have a kind of a solemn responsibility that like we are stewards of this capital, and this capital needs to return because health systems need to keep doors open. But two, that we have a responsibility portfolio companies that like we are the best source of that capital for them in that time period. And so for us, like consumer is not our bread and butter. Like it's not going to be the outcome. Go to a consumer fund and like, great. Like that is one of those like, and oftentimes we'll have that conversation with companies that we love your idea. Like we're not the right investor for you. And here's why we're not the right investor. And here's what you should look for, or here are the type of ones you should actually go after. And so I think being a responsible person in capital is really important, and not just taking up room on a cap table and not really doing anything. So there's that.
Right.
I think for me, I look at it from like a wider ecosystem standpoint. I don't think there's anything wrong with going into consumer. The thing that is odd about healthcare is that health, if you really get down to it, health is influenced by so many things. It's influenced by our food systems. It's influenced by our environment. It like there's so many factors that go into it. Healthcare is just a portion of how you react to fundamental health. And so if there's applications that help with fundamental health, I'm all for it. Like we need a healthier population, and health is like the greatest thing in life. No one wants more healthcare. Everybody wants more health. And so like I don't think that's a bad route to go. I know myself, I don't understand the dynamics well enough to say like this is a good investment opportunity, because my bias has always been health care and how does that ecosystem and that function work?
All right, so now I want to flip around a question. We talked earlier about, what aren't you seeing? I'm always curious, so what do you see too much of that is maybe sounds good on paper and just doesn't do it, isn't interesting, or is overhyped?
I would say the number one thing that's overhyped right now is AI. Which I don't know if other people are hearing this, but the number of AI, Gen AI, machine learning, you fill in the name, the companies that we're hearing that literally don't have revenue. They are an idea and they're having hundreds of $1 million of valuation. It doesn't make any sense to me. It's one of those where I think generative AI is an amazing technology. And so this is not a dig on the technology, but there hasn't been a lot of business models that systematically work in healthcare yet. And so there's a lot of experimentation. And like for me, I'm not willing to write that check right now and like bet that there's going to be $1 billion exits when there's so much frothiness and there's so many of them in the market. Would I like if I was a health system, would I adopt some of them? Yeah, like I think that could be a great opportunity. And so like the adoption piece, like would I use it versus what I invest in are very different. And so I think there's a lot of that. And there's a lot of companies that are not actually AI, and they're just like, they're just like labeling themselves AI in order to fundraise. I think being really intellectually honest in what you're doing and like what are the competitive moats that you're trying to build and what are you really good at, and not just like going with some like buzzwords is really important because it develops a level of trust. Because I think serious investors are also really interested in like the fundamentals of what the company is doing, and understanding that, and you're going to get to it in diligence. So you might get past the first initial with these like buzzwords, but like you're not going to get through diligence if it's not deeply based in reality.
Indeed. It seems like there are a number of companies that are confusing technology and application, right? There are investors who want to invest in developing new technology. That's fundamentally different from applying that technology to solve a problem. And I don't think I've ever met a doctor that said, the problem I have is a lack of AI. There may be a problem that AI could solve, but that's a very different thing. And yeah, we seem to really have kind of lost it, not quite to the level of like the crypto blockchain craziness of the past few years, but darn close.
there's a heavy amount of nonsensicalness to it.
Yeah.
I would say the other thing too is, and the reason I bring this up is there are some fundamental problems in the like the wider community. So like, let's just say one case in point, healthcare staffing. Everybody knows there's not enough staff out there. There are solutions though that they might not be an investable idea. And so the reason I bring this up is that oftentimes people kind of have this like narrow viewpoint of like, what are other startups that are doing, or what are other like large entities doing in the space? And the answer might just be, so like case in point, acute care staffing. There are, virtual nurses, there's all sorts of applications, and there are some venture-backed companies in that area. But what we're seeing a lot of our LPs do is they're piecing together kind of commodity technology, and they're doing it themselves. And so like that's the other piece to really be aware of, is that we sometimes see areas that are trying to create a product and a service out of something that's not, like there's not enough competitive moat in order to defend it. Like you can just like, telemedicine has been amazing because you can just like take parts off the shelf and piece it together, and that is not a differentiation anymore. And the differentiation in that case would have really come from being an amazing executor and like the operations of it, but it's not the technology. And people often confuse like, oh, if I make it slightly better, it's going to be like, that is going to be how I'm going to win. And oftentimes like the standard is good enough, and how you run the company is more important in that case. And so like,
there's a big difference between being a venture backable company
yes,
and being a good business. A good business can be venture backable, but it's not necessarily a venture backable business.
yeah, and there's
Interesting.
a lot of validity. So like the company, the company I was starting out of, HBS, we purposely were not going down venture. So that's why I'm like, I work in venture capital, and I started a company that was trying never to raise venture capital. Like that might seem a little odd, but the motivations and how we were building it were very different. And there are certain expectations of what you have to do when you take venture money. It's an amazing ability to grow quickly and de-risk factors of it, but not all business models fit.
One more question in from the audience. They're asking, I'll paraphrase it a bit, but what's your take on Medicare versus Medicare Advantage in innovation today?
Yeah, so Medicare Advantage, I think it's like the most fascinating thing right now, just because it is it is going through a lot of we'll call them growing pains. I think from a government standpoint, the creation of Medicare Advantage did what it was supposed to do. And so like I'll expand on that. So the federal government, in my view, this is my personal view, wanted to get risk off its books. The best way to get risk off the books is to create a good arbitrage opportunity where you almost guarantee people to make money in a business model. And so they did a fabulous job in it. Like there has been very few things that have gone from 0 to 50% market share in a very short amount of, like the chart is just like straight up in a very short amount of time. But they did that because it wasn't that it was easy, but it wasn't that difficult to figure out the risk scoring, the RAF scoring, in order to figure out how to make money for the payer in that case. No phrasing in that is better care for the member. Like that is what's been divorced in this conversation, is that they were good business models in order to create it. And that is not to say some Medicare Advantage plans are not good at this. What we're seeing in this like next iteration, and that's why like it's an interesting transition point, is that you now suddenly have to not only do your risk scoring, that's still very important to figure out like what is the risk of your population in order to get paid correctly, but you actually have to influence care in order to decrease waste, increase quality, and like get people the right care at the right time. That is completely different business model than's been happening in the last 10 years. And so I think what we'll see a lot of is you see some companies exiting MA because they don't want to do that work, or that's not their forte. You see others doubling down and saying like, this is actually something I can fundamentally do differently than others in the market. And so like, this is my competitive advantage. But I think we're going to see a whole lot of unrest, and I think we're going to see some MA companies go under. We're going to see some really bad results because people have created business models to score risk. They haven't created business models to fundamentally create better outcomes for members. And so in certain cases, I think it makes, from a personal standpoint, I think it makes a ton of sense to just take Medicare. With supplementals, other people, there's reasons why to take MA. But from a business model standpoint, it's going to be fascinating. So I'm looking forward from like an observer standpoint, and I'm obviously heavily reading about it to figure out what the next steps are.
Yeah. And I think that fascinating point might be the right spot to leave it at, because that I think gives us some pretty good food for thought. So Kate, I'm going to say thank you so much. That was super insightful on the venture world, but also on some of the changes that are happening in healthcare more broadly. Kate, thank you for taking a little bit of time out of your day today.
Yeah, thank you.
And folks, thank you for participating today. If you have any further questions or you need to get in touch with anyone at Medical Alley or our partners, you know where to find us. Until then, have a great day. See y'all.